So we're here with Jeremy Springer, Pike Creek Financial, top producer at Alliance Group in 2022 so far. And we are talking about this idea of life insurance through work as opposed to life insurance that you actually own. I know that you get this question a lot. Why is it important to actually own your own life insurance and treat what comes through work as what it really is, which is just kind of a bonus, like icing on the cake?
Yeah, so that's something that I run into a lot is most people, by the time I get with them in their stages of life, already have picked up something at some point in time. They've picked up something either when they initially got married or had a kid or their parents got on them about getting a life insurance. So they just assume, I'm good to go, I'm set. So when I run into that, I always make sure I explain to them, like, that's great that you have either a life insurance that you picked up outside of work that's just a generic life policy, or more so the one that you have through your job. And specifically when it comes to the ones in your job, I always tell people it's cheap for a reason, and don't cancel it because I'm not going to have that come back on me if, something was to happen. But I try to tell people a lot of times your work policies are either accidental death, has to be the accident or issue has to happen literally during your work hours. So say you are a banker and you have a heart attack on your couch on a Saturday afternoon watching a football game, that policy's not paying out. You know what I mean? And a lot of people just assume I have a work policy, it's going to pay out regardless of what happens. And I always tell people employers are not going to be, excited to make policy payouts if they can fight it and if they can figure out a reason not to pay it and everything.
Yeah.
And people ask me, well, should I keep my policy? Is it a scam? I'm like, no, it's not a scam, but you get what you pay for.
Right.
And when I tell people that, and I was like, a lot of times you're probably not covered for as much as you think. Like a lot of times people think they're covered for like $500,000 through a job. And if you read it,
you're never covered for $500,000 through your job.
You're lucky if it's one time your salary. So if you're making $50,000 a year, you might get $50,000, maybe $100,000 depending on.
Maybe 2 times your salary,
exactly.
But that's still not.
It's not enough. And the big thing is people are always switching jobs, getting laid off, things like that.
Or getting a better job.
Exactly.
Switching jobs because it's a better opportunity.
Exactly. And those policies, if you leave that job, that stays with that employer. You cannot take it with you.
Exactly.
If you get fired, you can't take it with you. If you resign, you can't take it with you. And if you've been in that job for 5, 10, 15 years, when you have to go out looking for another policy, you're going to be 5, 10, 15 years older, which is only going to make things more expensive. So I always tell people it's always best to at least have one through your job. If you have one, great, but get one on your own, a standalone policy. That way it's with you as long as you want to stay with you. Plus it comes with, again, the living benefits because your work policy, if you have a stroke, heart attack, cancer, if you can still perform your job, they're going to expect you to be at your job on Monday, sitting at the desk and everything.
Absolutely.
And I tell people the benefits of having the standalone policy is we don't sit there and ask you, okay, you have this cancer or heart attack or stroke or ALS. Can you still go to your job? It's, okay, this is the illness or diagnosis. This is the payout based on that. If you don't want to go to job, work something out with your employer through FMLA or something like that where they keep your job, but you can use it to cover your loss of income. You can take time with your family, get treated, but just not that stress of I'm dealing with this cancer or this heart attack. I got to go to work, deal with my boss. I mean, it's just a headache. And so that's my main selling point with having a standalone policy is you can kind of call your own shots. I get sick or injured, I want to spend time with my family. If it's something really bad, I don't want to go back to work. So I'm going to cash this thing out, use it for loss of income, pay my things off if I have to, spend some time with my family. And once people start realizing, one, not so much, I'm not covered for as much as I thought I was through job, but realizing there's actually something out there better, then, it kind of starts clicking and making sense and everything.
Absolutely. But, I mean, it just makes sense to own your own coverage that will be yours and goes with you wherever you go, no matter what. And you know that it's there and you know that it's going to pay out in certain scenarios.
Yes.
And then treat whatever comes through work as what it's really meant to be, which is icing on the cake, a cherry on top, right? I mean, and that might be there or might not be there if you moved on to a different job. But it's important, as you're saying, Jeremy, to own your own coverage and treat whatever comes through work as a bonus.
Exactly.
Listen to this interview and more on the Alliance Group podcast.